This video will walk you through the solution to exercise 17-8, which focuses on accounting for preferred share dividends, both cumulative or non-cumulative, and participating and non-participating. Here's the data for our problem. AIM Inc. had the following share capital outstanding at January 1st, 2027. It had Class A common shares, unlimited authorized, 250,000 issued, for a total value of $8 million. It also had Class B preferred shares, $100 par value, $3 dividend, 100,000 authorized, and 50,000 issued, for a total of $5 million. At the end of 2027, the company declared total dividends of $1,200,000, and no dividends had been paid in either 2025 or 2026. Our requirement is to determine the amount of dividends paid to each class of share under each of the following independent conditions. So under requirement A, we'll say the Class B preferred shares are non-cumulative and non-participating. What we want to do first is always make sure that the preferred shareholders are paid out first. So since their shares are non-cumulative, there's only 1 year of dividends to record for the current year. So 50,000 shares outstanding times a $3 preferred share dividend is $150,000, and thus the leftover all goes to the common shareholders. So if there is a total of 1.2 million in dividends paid, the first 150,000 goes to the preferred shareholders, and the remaining 1,050,000 to the common shareholders. In requirement B, the Class B preferred shares are now cumulative but non-participating. So before the common shareholders can receive any of their dividends, the preferred shareholders must receive any dividends in arrears plus the current year. So for the preferred shareholders, there are 50,000 shares that pay a $3 dividend and are 2 years in arrears. That's a total of $300,000 in dividends allocated to the arrears. On top of that, they also receive their current year dividend of $150,000, calculated the same as we just saw. So that's a total of $450,000 paid to the preferred shareholders. If the total dividends paid are $1,200,000, that means that the common shareholders will get the remaining $750,000. Now in requirement C, those Class B shares are considered to be cumulative and fully participating. So again, we'll deal with the preferred shares first. The arrears are $300,000 as we calculated previously, but now things change with the current year dividends. The preferred shareholders still receive their $150,000 current dividend, but the common shareholders also participate in the current year dividend at the same rate as the preferred shareholders. So if a preferred share has a $100 par value and pays a $3 dividend, that's a 3% dividend rate, $3 divided by 100. The 3% can also be calculated as the total current year dividend of $150,000 divided by the $5 million in preferred share equity value. This 3% will determine how much gets allocated to the common shareholders in the participating dividend. If there's $8 million in total common share value, 3% of that is $240,000 in common share dividends for the current year. Now comes the remainder. So up to this point, of the $1,200,000 in dividends declared, $300,000 goes to cover the preferred shares in arrears, and $390,000 to the current year basic dividend at a rate of 3% for both the preferred and common shareholders. That leaves a remaining amount of $510,000 to distribute between the preferred and common shareholders based on their proportionate share equity values to the total. So the preferred share participating dividend is calculated as the remainder of the dividend of $510,000 multiplied by the $5 million in preferred share value divided by the total share value of common and preferred shareholders of $13 million combined. That's $5 million plus $8 million, or $196,153. Now this is calculated to be an exact value, but this solution is actually calculated based on a slightly rounded proportion of preferred shares to the total, where $5 million in preferred shares divided by the total share equity of $13 million is approximately 38.46%. When multiplying by the remaining dividend of $510,000, that's $196,146. The balance to make the total dividends work will be $313,854 to the common shareholders, which can be proven by taking the $8 million in common shares divided by the total $13 million in equity, or 61.54%, multiplied by the total remaining dividend of $510,000. The exact value would be calculated as the $510,000 multiplied by the 8 million common share value divided by the 13 million total share value, or 313,846 to be exact. These are small differences due to rounding and have no impact on the solution. And that's it. We've solved this problem.